Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, June 23, 2022. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? They tried to make a little bit of a push higher. What we're going to do today is take a look at some of the intraday charts and draw a comparison to something that happened before on a different chart. It's somewhat of a similar situation. We'll look at both sides of the tape. We're going to provide some numbers. The first thing we're going to do is make an assessment of the daily chart. Nothing's changed from a trend standpoint. The trend is down. The trend is your friend until she throws your shit out the window. Before we go any further on the daily chart, I thought what we'd do is take a look at the weekly and work backwards from there. Why is that? Because there's something important to discuss on the weekly chart. Fair enough, we made the 365 and they bounced. Okay, that's done. It's over. Now, if it's bullish even for a short period of time, what are they likely trying to do from a weekly chart perspective? They're climbing the most recent breakdown candle toward the high. That's what's going on now. So we need to understand A, where that high is, and B, what's above the high. So the high we're talking about is 383.90. We're calling it 384 for argument's sake. There's a couple of possibilities from a weekly chart perspective, and this takes a while to play out because it's week after week after week, but they could stay down here underneath that breakdown candle high all the way over here, and they can just build a bearish pattern and then release the energy in the southern direction at some point in the future. That's one part or one possible schematic. The other side of that, the bull case from that is they continue working higher. They run a test of the high of this breakdown candle. We're calling it 384 for argument's sake, give or take whatever on either side. Pushing above the high opens the door to fill the gap. The gap happens to be 389.80. We're calling it 390 for argument's sake. Pushing above the breakdown candle high at 384 is not necessarily an easy walk in the park. However, running a test up to that high won't take a whole lot. They can goose the market on any piece of news, economic data point, rumor, whatever you will. They can run a goose operation up to 383, 384 in a flash. They can gap the market up Friday morning. Anything goes. Back to the daily chart. The 383.90 is this pivot high right here. Same scenario, same routine from the weekly chart. All this is at present is a bounce in a downtrend off of an important number. No more, no less. Let's talk about time for a moment. Time is more important than price. So we take the low from last week, and this is a hypothetical situation, but it's an awareness type of thing. So let's say they bounce the market up into the weekend, into Friday, maybe even on Monday. All of a sudden, that's a big if, but if, all of a sudden, come turnaround Tuesday, and you're what? You're on time. What happens if they were on time into Tuesday, late Monday, something like that, around 384? That becomes an interesting situation. Run a test of a breakdown candle high, get rejected from that high on turnaround Tuesday. Again, it's a hypothetical, but we're going to keep notes on the situation. I would put that one on a sticky note. When we flip things around, because we are the umpire calling balls and strikes, what do we have as a line in the sand that opens the door to a lot lower prices? We have yesterday's low. Now, a lot has to happen for them to go visit yesterday's low, but below yesterday's low opens the door for the gap left open from last week and also 365. And if they're down there, we have other discussions that begin to take place about where they might be going if they open the trap door again. For now, from a night before perspective, and inside the number members will certainly have more refined numbers in the morning, but we'll use yesterday's low as that line in the sand. Now, before, I talked about a specific pattern, a flaggish pattern that's developing on another chart that's similar to one that happened before. Now, what am I talking about? I'm talking about this guy right here. So this is the daily chart still. This is a bullish, flaggish pattern that failed. So what do we say? We say that these patterns will generally release the energy in the upward direction, but either way, they're going to release the energy one way or the other. So if they fail, that same energy gets released, and in this case, got released in the southern direction. Okay, fair enough. Now, how does that relate to something else? For this exercise, we'll use the 120-minute chart. We can use the hourly chart. We can use the 240. We can use a half-hour chart. It doesn't make a difference. They all look the same. Some are just more squeezed together, and some are more stretched out, but they're all doing the same thing. So nothing ever is identical, but this is very similar to what happened before on the daily chart, the one that failed in the southern direction. Now, this has the appearance at today's close of beginning a breakout process, but we're no wiser. We know anything can fail at any time, but let's talk about what we have on the table and what they've been doing. So let's assume for a second, for the purposes of this conversation, it's not going to fail. Now, why haven't they gone up yet to take care of the unfinished business? Where's the unfinished business? And from inside the number, members will remember it's at 479.20. So they didn't get there earlier in the week. They didn't get there today. The high is 378.83. The unfinished business is about 40 cents higher, give or take. Now, why haven't they done it? That's by choice. There are no accidents or coincidences. So here's the read on that. This line is at 379.20, and you can see they kind of got it, but they didn't get there. Tried it again today, and they didn't get there. So here's the thing we look at. Here's the way I look at it. They're eating time off the clock underneath this gap, which is at 379.20. They could have reached it. They didn't reach it. So it's one of two things. They're so weak that the bears just won't let them fill the gap, and they're going to collapse back down in the same fashion they did before off the daily chart. That's option number A. Now, option number 2 is simply eating time off the clock. They didn't go get the 379.20. They didn't satisfy the quote-unquote unfinished business because the ultimate destination on this particular move is a lot higher. They're not worried about the 379.20. They're going somewhere else. Now, in the big picture, maybe this is telling us that they want to go and fill the gap all the way up here around 390, give or take. However, that's a little ahead of our skis. So what we'll do is, if they're above, for example, 379.20, we'll settle for something in the 384 neighborhood for starters. That's the bull schematic for Friday. What's the bear schematic? Well, for starters, if they get below 375, it opens the door for lower stuff, and that's where inside the numbers comes in, where we'll have specific numerology posted around 0 dark 30. Speaking of inside the numbers, let's take a stroll through the commentary. We'll circle back to stocks on the move that were mainly dud-ish today. Dud-ish means there were a bunch of duds on the board, but we'll look at them anyway. We have a happy Thursday. Wake up green after another opportunity to send price lower is left on the table. That's something else that we need to talk about. This is the ES futures chart, and what I want to point out is here, this is 6 o'clock in the morning yesterday, and this is 6 o'clock in the morning today. So both days they try and push them lower. However, they're not able to do it. This happens to be 4 o'clock in the morning. They were making a low of 37.35. Just to give an example of where they were right before the closing bell today, they were up at 38.05. My point here is, in the middle of the night or early in the morning when they're selling off, they have every opportunity to continue to push price lower, but essentially what happened is you have one of two things going. either a channel, a trend line, call it what you want. It's at least being supportive of the market in concept, but keep in mind, this could also be a bearish pattern that goes like this. Both things are possible. That's why we have to use a lot of different things around the horn to determine what the next likely move is. Now, keep in mind, this is a 24-hour chart. This is a continuous contract. This looks completely different than the pit session chart. That's your pit session chart. Looks identical to the SPY that we looked at, regular business or market hours. Okay, thought it was worth a sidebar. What's our pivot this morning? How about 377.45? Right out of the chute, zero dark 30. Getting above, closing candles above, opens the door for 379.20, which we've talked about. And now on to the chart, 5-minute SPY chart. Right of the vertical is today's activity. The horizontal line represents 377.45. So you can see the opening print today was exactly 376.64, 377.45. They ran a test of, rejected. Ran a test of, rejected summarily, went right back to run a test of, got above, closed above, right into the closing bell for the most part. Let's just call it the last half hour of the day. Is the market trying to tell us something? Remember, 377.45 was the pivot. We had some higher numbers. We didn't need them today. We talked about some of this stuff. They're climbing the breakdown candle. The flip side of things were pretty clear too. Below the pivot keeps the door open for a test in the zone between 375.75 and 374.40. Any more than that, and we'll handle it in real time, and we did later on. And then, as we know, the gap higher open, which we had today, takes some of the opportunity away from stocks on the move. Either way, whether it was a gap higher open or not, it was a opportunity-less stocks on the move type of day. Remember, the zone between 375.75 and 374.40. You could see what happened. The first number was supported in the morning. The second number they got a bounce from in the afternoon, got a little bit lower. There was another number on the board that'll show up as we scroll up the page. There are your main numbers for the day, and you can see the market basically traded in a range in between them all day long. We're moving along. Let's see what else we have. Test after test, 8:55. Half an hour before the opening bell, they ran up north to around 377.45, of course, then came down to the southern zone with a spike of 376. So that was before the opening bell. So on one hand, they're confirming the numbers for me. On the other hand, I hope the thieves aren't taking all the fun away. We'll let them get the thing open. There could be a vacuum below 375 if the bears picked up a fumble. Awareness. We'll get back to that a little bit later. What I urge you to do is pause the video, read the notes, go back to the chart to double check the work. I'm going to highlight a few other things, but you'll see these numbers come up over and over and over again. So 952. So 374 should be 25. 23 is a line in the sand on candle closes, opens the door for 372.50, give or take. That's a big spread. That's about almost 20 handles in the S&P. They didn't get there. They came close, turned around, went back up in the other direction. Does this count for a give and take? The low was 372.89. We'll call it 39.40 cents away. Not really the give and take I would consider give and take, but maybe it's close enough for, as they say, government work. It's not really close enough for this kind of work. What you'll see throughout the notes is a reinforcement of all those numbers. You get below one, it opens the door for another. You get above one, it opens the door for another. Now, here's a picture because we like pictures. We like to think in terms of pictures. This is the same thing we went over before. I just did it for inside the number members with an image in the middle of the day. It was a range-bound pinball type of day. Read the notes. Go back to the chart to double check the work. Only 3 potential opportunities on the board today. 2 did not hit their numbers. one did. We'll look at the chart of Freeport McMoran, or FCX. Haircut at the opening bell, and you can see here they came up short of the first number in the first 5-minute candle of the day. The low was $30.40, a nickel away. They bounced up. That takes the first one off the table, and then they came up short of the second number, bounced back to the first. By that time, the trade is over. It's a no trade. When they came back into it in the afternoon, around lunchtime and thereafter, the trade is done. We're not taking that trade. They didn't do it in the manner in which we prefer. It's here that we would have liked them to come into the second number, and then here we would have liked them to come into the first number. When they start bouncing away and doing the Macarena, we lose interest. What's going on over in Camp IWM? Well, last couple of days we had some relative weakness or lack of relative strength in the IWM, and mind you, this is my favorite market leading indicator. Today, we had relative strength by a little bit, but it was still relative strength against the S&P 500. So, if we just look at the daily chart, what are we looking at? We're looking at an attempt over here on the 21st at this gap. They came up short. They traded away. Here they come again. Are they going to fill the gap, potentially go higher? We don't know, but this is certainly in all the same market type of environment. So if they're doing that, the S&P is headed to or above the 379.20 and so on. Again, still just a bounce in a downtrending tape. That's it. There's going to be another short trade coming to a chart setup near you. What's going on with the folks down at the transportation department? Well, they ran a test of an important spot today. What was that spot? 12,800. Came up a few points short, but it's still a test. And then they flipped around, went back up in the other direction. So what are they doing? They're either building a bearish pattern, going to go a lot lower, or they're going to first at least run a test near this breakdown candle high. The high is 13,267, so it's something of a give or take on that. And then if they get above, they'll fill the gap up here. Still a bounce, and a downtrend still doesn't take them out of the bearish pattern until they get really above this pivot high over here, 13,600 we'll call it. Even at that, it would still be a bounce and a downtrend. Just looking at the big picture for a moment, one of two things is going to happen in the right and the middle. One is they go lower, and this isn't tomorrow or anything, just in terms of the next larger move. They go lower into the 200-period moving average, likely a little bit lower, down to 12,000, big fat round number, something in that neighborhood. The actual number is 11,800. You might want to put that one on a sticky note. Or the other side is, instead of doing that, they first run a test of the 100-period moving average that they recently just gave up. If you look over to the left, this area here was a breakout area. Why do we say that? Because the market basically ate time off the clock here, broke out. When it came back, it did what? It came back to test the most recent big-time breakout area. That's a weekly chart. That's a big spot. Didn't mean they had to stop on a dime at the top of it. They could have dug in a little bit, got down here, still considered in large part a breakout area. It's an area, not a number. The number is derived using a different type of thing. It involves a calculator. What about the Q people? Anything different here? Nope, same scenario. If they're going to push higher, they're going to go fill the gap. The gap over here is officially 288.84. Still a bounce and a downtrend, but that's the bull case. The bear case, getting below yesterday's low. The low is 277.91. That opens the door for the gap down here, and then a potential trapdoor situation. XLF, they're stuck around 31. Not much we can do with this. They're either going to shoot out of here from 31, or they're building a bearish, flaggish type of pattern, and they're going to release the energy in the southern direction. Technically, they still have some unfinished business down at 30. They may need to visit 30 bucks. Smash Mouth, weak, not doing much, just going back and forth, playing pinball, creating a bearish, flaggish pattern. If they bounce, it's a bounce and a downtrend. Just like the other charts, they still have a gap here that was not filled. That's unfinished business. If markets are bouncing higher, everything's bouncing higher. If the markets are selling off, everything's going lower. That's just the way it works. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.